Hello Oracles. Well, Tesla is prepping to flex its pricing power. What do I mean by this? This is something we have been discussing all year long when it comes to Tesla and its competition. People saying competition is coming, but the reality is competition does not have the pricing power like Tesla. The competition needs to sell 3 to 5 to sometimes 8 times as many vehicles as Tesla just to be able to make the same bottom line profits. This here gives Tesla that pricing power. Tesla is reaching near 30% margins again. Meanwhile, some of the best competition that is out there is only achieving 12 to 15%, and that's on their ICE vehicles in their luxury brands. When it comes to their EVs, the majority of them are not even profitable at all. So this means that going into next year, we're going to put together all of the different pieces of information from both Tesla specific and from the macro environment to figure out when Tesla's prices are going to be coming down and they're going to be able to utilize and flex this pricing power. So looking at Tesla specifically right now, we know that in the US, Tesla is offering its customers $3,750 if they take delivery before the end of the year. I am one of those customers. So I've gone through all of the financing and I noticed that the $3,750 was not on there. So I reached out to Tesla and I asked them, and they said that within 24 to 72 hours prior to delivery, that will come off of the price. Awesome. So all in all, because of the fact that I had placed the order for my vehicle back in March when I had re-updated it, with this $3,750, I would actually be doing better by purchasing it now than waiting until next year to get the EV tax credit. Now don't forget, in 2023, the EV tax credit is not a rebate of $7,500 coming off of the sticker price. The $7,500 is an actual tax credit that will come off of your taxes in the following year. So for 2023, it is slightly different. In 2024, based upon how the plan is written, it looks like we will be getting $7,500 back in a rebate at the time of the purchase. So realistically, we may end up seeing a similar situation like this going into the end of next year as well, where people in the US may be making the decision of, do I purchase my vehicle in December and get an EV tax credit, or do I wait until January to get the $7,500 rebate? Now, that's how the bill is written right now. Don't know if things are going to change with that. However, based upon the information we have currently, that might be something that happens at the end of next year. Now, we also got some information coming out of China that they are offering another program as well of an extra 6,000 yuan coming off of their sticker price also. So very similar to what we have here in the US with the $3,750. Now over in China, they also had an 8,000 yuan credit when it came to their insurance, so that would equal 14,000. Plus there's an 11,000 yuan subsidy that you can get from the government. So total overall over there, they're looking at about $3,600 that they can get off of their vehicle at the time of purchase if they get it before the end of the year. So very similar situations going on. So it looks like Tesla's giving away these credits right now and some discounts. And now these are not price reductions. These are just discounts at the time right now before the end of the year, sort of like a holiday special. So that's pretty awesome for people who are looking to buy their vehicles now. And so why is Tesla doing this right now? Well, perhaps they're looking to get this nice little push into the end of the year. As Troy Tesla had mentioned, this could be the difference between Tesla hitting 39% year-over-year growth or achieving their near 50% year-over-year growth, as they said that they would be doing in Q3. Elon did say that we would be having an epic Q4, so let's see if maybe this is what is going to play into this to achieve that epic Q4. Now going into next year, the macro environment could be playing a more significant role in this also. So we also know that Elon in the past has said that the prices of their vehicles are embarrassingly high, and they do want to bring those down as long as costs of the vehicles come down also. Tesla is in the works to drop the costs of their vehicles by becoming more efficient, getting to higher and larger economies of scale. That's going to help. We know that they're doing Project Highland, which is most likely going to be a single casting of the Model 3 to make that even more efficient as well, which will most likely bring down the cost of that significantly, which in turn means that they can bring down the price of the Model 3. I have mentioned this before, if they're going to be coming out with a lower priced vehicle in 2024, if they don't do something for the Model 3 to bring the price down, they're most likely going to completely cannibalize the Model 3 because people will be choosing either the Model Y or they're going to be choosing the lower priced vehicle, and the Model 3 is not going to really have a place. So if they have a Model 3 with a significantly lower price than the Model Y, and it's going to be a significantly better value than the lower priced vehicle and have it be worth that extra money, it'll be in that nice sweet spot. I have a feeling that is what Tesla is looking to achieve. And as we are seeing the entire global recession starting to really take effect, we are noticing this over in China as well. This is kind of what spurred on the last couple of months of some discounts that Tesla has been giving out, just because of the fact that their overall economy is shrinking right now. So this isn't a Tesla specific issue, despite a lot of people coming out on the bear side of things and saying that Tesla is losing demand over there. It's overall the entire economy is shrinking. That's truly it. That's what's going on over in China right now. And we might see this on a global basis. Here in the US, we are looking to have our FOMC meeting next week, and we're looking to be having the interest rates going up, most likely 50 basis points. Some people are arguing that the Fed needs to slow down with rates because inflation is coming down. This is true, but we still do have high inflation. Another concern out there is wage inflation. Wages are still going up. We do not want to get into a wage price spiral. This is where both the prices of goods and the prices of wages are going up at the same time and continually competing against each other, therefore giving us runaway inflation. We don't want that. So we have been seeing the CPI and inflation coming down consistently for the last 5 months. This is a very good thing. But the last sticky piece has to do with jobs and wage inflation. So the Fed does want to get that back into control also. It does stink for workers. You would think that, hey, please let us catch up. For goodness sake, we've had prices that we've been chasing here. We're not making enough money to make ends meet. Let me at least let my wage get caught up. Unfortunately, if we get caught up there, prices of goods may end up going back up as well. And we're in a good direction right now when it comes to inflation coming down. So I'm not a fan of this either. I don't like how that system works, but that is where the Fed's mentality is right now. Now, the good news is there does seem to be a bit of a lag when it comes to the wage inflation, which is not a bad thing because it will allow us as workers to get a little bit caught up. But as we get caught up, we want to make sure that that does get capped and starts coming down again. As that starts to happen, what's going to happen is the Fed might end up having to push us into a recession as we are foreseeing right now, strictly to be able to get that in line. In order to get things in line like that, they need to slow down the economy. And this means that we would end up seeing earnings recessions. We would end up seeing other recessions going on as well. We'd see the GDP coming down. All in all, it sounds terrible, but it's a necessary evil that we have to go through. This is what we went through in the last recession that we had back in 2008 and 2009. That was needed. We needed to bring it down. It stinks when you go through it, but it's necessary to kind of flush things out and give yourself a new footing. In the process of doing this, we could see prices of everything coming down. This is not a bad thing. So we're going to have cost of goods coming down. We're going to have the sales of goods coming down and wages coming down. In turn, the prices of Tesla vehicles could potentially also come down. This is where Tesla will be flexing its pricing power. As the entire global economy comes down, the pricing of all of their goods will need to come down also. We will see on the Q4 earnings, based upon all of the discounts that Tesla has given out for China, the new discounts that Tesla is giving out for the US, where they still stand when it comes to their margins. We know that they are looking to be achieving that 30% margin again. They were relatively close this past quarter. If they can end up achieving a 30% margin with all of these discounts, that is going to be a massive signal that Tesla was able to come down on their costs significantly, which in turn means that they will most likely be coming down on prices of their vehicles in 2023. This is just my speculation based upon all of the information that we have right now and what Elon has told us, where the global economy is going, where Tesla has been going recently just with their discounts. Tesla may be doing these discounts for two different reasons. One, to be able to get this little end of the quarter push, and two, to kind of test to see where their margins will be when it comes to their vehicles at the end of Q4 with all of these discounts. This way they can assess going into 2023 what they want to do with pricing. Now again, with this Project Highland, who knows what that's going to be doing for cutting costs. We also have the Cybertruck coming out next year, which is going to boost up margins as well. I have a feeling the Cybertruck is going to be giving us margins in the Model X and Model S type range, so we're probably going to be having some nice higher margins when it comes to those vehicles. Granted, the Cybertruck is not going to be producing a significant amount of vehicles in 2023, but it could make a difference. So, putting all of the pieces of the puzzle together, if over the next 6 months we end up seeing ourselves go into a global recession, we do end up seeing the Fed pause with the interest rates, waiting for everything to catch up when it comes to pricing and inflation, this in turn could end up bringing down the prices of Tesla's vehicles. Now, again, when it comes to Q4 earnings, we'll take a look at what the margins are, because if the margins are over 30% and Tesla continues to come down on costs of their vehicles because all of the costs of the materials has also come down, that will be a great sign again that we are going to be seeing the prices of their vehicles dropping. And so now this is one of the reasons why I am torn with what I want to do with the purchase of my vehicle. I am ready to take delivery of my Model Y. In order for me to get to that level where I want to have a $700 a month payment, I would have to put $10,000 down on this, and that includes me trading in my current vehicle. This I'm not opposed to. However, looking at what we could potentially be seeing next year, if we end up going in the direction that the economy is moving and we have costs of goods and everything coming down, Tesla continues to get more efficient, bringing down the cost of manufacturing, then we could end up seeing a price drop at the end of next year. So if we end up getting this price drop near the end of next year and you get that EV tax credit on top of it, if I wait a year, I might be able to get my vehicle for a significantly better price. That is just my take on it right now. This is why I am so torn as to what to do. I know what I can do right now. I know what the price of the vehicle is right now. I do not know if Tesla is going to be making these moves in the future, but based upon what Elon has told us, they want to make these moves in the future. And now, as many of you know, I do have other factors in play, like I'm looking to purchase a house, I don't have a place to come home and charge my Model Y at this time, so I kind of have other priorities in line right now before I can make that decision, but these are the numbers I am working with. So also knowing that we have that lower price vehicle potentially coming in 2024, they might end up lowering the prices of all of their vehicles anyway, just to stay more competitive with themselves. A lot of different factors involved, a lot of what ifs that are out there, and you guys can let me know in the comments below what other factors you think might play into Tesla potentially dropping the prices of their vehicles. Now don't forget, when it comes to the pricing power, that margin is it. They've got so much room to play with. Their competition is really starting to push up their EVs. However, don't forget, competition is not profitable on their EVs. So if Tesla ends up coming down on the prices of their vehicles, most of the competition does not have economies of scale yet. They don't have the luxury of having lower costs due to those economies of scale. If Tesla comes down on their prices, competition will also need to come down on their prices in order to stay competitive, because they're not producing enough vehicles. Meanwhile, Tesla is increasing production significantly. Tesla will have more than enough vehicles to be able to dole out to all of their customers and take up anything that competition cannot scoop up as well. Now, if competition cannot come down on the prices of their vehicles because they will make even less margins and they don't want to go into the red anymore, that could spell disaster for competition come the end of next year if all of this plays out. Tesla will have that luxury to be able to drop prices, and competition will not. And so looking at how this could play into the stock price itself, the stock price is still going to be trading based upon the macro. If the economy starts to go into a recession and we get into this deeper global recession, we will most likely see a lower stock price because the entire market will still continue to pull back. That's just what's normally going to happen. So we will see where we end up coming down to if this is the transition we go with. However, don't forget, this is just near term. This is the next 6 to 12 months. Look longer term past that. We get to the point where Tesla comes down on their prices. Tesla now has lower priced vehicles with those same high margins on those vehicles, meaning that they can increase demand significantly. Don't forget, Elon had mentioned that coming down on the prices of vehicles in a linear fashion does not mean that demand goes up in a linear fashion. Demand goes up exponentially based on a linear drop in a price. They're not correlated exactly. If you drop the price of a vehicle by 50%, you're going to go up with 10x in demand. So it is a significant jump in demand. So even if Tesla comes down on their prices by 10% or so, we're going to see a massive jump in demand. Tesla will be able to handle this demand because they are producing so many vehicles. Competition will not, and competition also will not have that luxury of dropping prices to be able to boost up that demand. And even if they did, they're not producing enough vehicles to be able to meet that demand. And this is the problem Tesla was facing over the last 2 years, which is why they went up on their prices. Difference between now and then is the fact that over the last 2 years, the economy was still doing very well, so Tesla had the luxury of going up on prices. You don't want to go up on prices if we are going into a global recession. This is going to be a very difficult sticking point for competition as we go into it next year if Tesla does end up flexing its pricing power. And so while the stock price along the way might be reflecting what's happening in the macro environment, as soon as the entire economy does end up turning around, we are going to see who is left when the dust settles. Tesla will come out on top. This is something I've been talking about all year long, where regardless of whether we get into a recession or not, Tesla is going to be the leader going through all of this. However, if we do get into a recession, Tesla is going to actually come out even stronger, even though we may dip down further before then. This is because Tesla will be selling even more vehicles at those same margins, but with lower prices. This is going to give Tesla an even bigger advantage. Think about the fact that we could be coming out of 2023 with Tesla at lower prices and still a 30% margin, maintaining that pricing power going into 2024, still being able to get that EV tax credit. So this is just what I'm looking at going over the next year. I think the stock price might take a hit even more over the next 6 to 12 months based upon the overall economy, but I think coming out of it, Tesla is going to become even stronger afterwards. So this is another reason why I am continuing to add on a regular basis when it comes to Tesla stock, because I am seeing massive parabolic moves coming in the future for Tesla once the economy does turn around. And I know in this moment right now it doesn't feel like it, especially at the time of this recording. We are down another 2%. Something we discussed last night is that level of support at $180. If we can hold that level of support, this will be great. If we do not, we will be closing below that, and we will be looking at that support level at $167. We have that gap down to 170, so we may very well come down, fill that gap, hit that 167 level, and then stop there. Just like we saw all year long when we had been coming down from that $313 level. I'm just monitoring level to level. I can't predict the future. I don't know what's going to happen. I just look at the levels that we're at and I say, well, we're either going to hold it or we're not. And if we don't hold it, we will most likely be coming down to the next level below it. If we go above it, we will then pay attention to the next level above here. Above us right now is the level at $200. So just something that we're going to be paying attention to. But again, looking long term, I think that we are going to be doing extremely well, and we're going to be paying attention to this pricing power that Tesla has over the next 6 to 12 months. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat. That link is down in the description. And if you'd like to support the channel any further, we do have a membership program and a Patreon. Those links are also in the description. Thank you so much. Have a great one.